If you don't know whether the market is bullish or bearish, you will always enter trades randomly. In this video, I'll show you how to identify market direction using structure. Okay, let's go. Before we start, remember in our previous video, I said market structure is built using swing lows and swing highs, right? If you don't know what your swing points are, just check out our previous video, you get a clear understanding on that. Okay, now trying to identify a bullish trend. I want you to pay attention to this. Whenever price creates a high, retrace, puts in a new low, and breaks above the previous high, it's a clear indication of bullish strength, right? Whenever price breaks above a swing high, is a clear indication of bullish strength. Okay, then whenever price breaks above a swing high repeatedly, just like in a scenario like this, where price breaks above a swing high repeatedly, it's a clear indication of a bullish trend, not a strength, right? Whenever price breaks above a high, price creates a high, retrace and breaks above it, this is a clear indication of a bullish strength, not a trend. Then whenever it happens repeatedly in scenarios like this, right? Price puts in a high, retrace, breaks above the high, puts in a new high, retrace and breaks above the previous high, it's a clear indication of a bullish trend, right? So in a bearish trend, it's simply the same thing, right? Whenever price breaks below a swing low, so you can see we have a swing high here and a swing low, then price retraced, put in a new swing high, then break below the previous low, this is a clear indication of a bearish strength. Then whenever price breaks below the swing low repeatedly, it's a clear indication of a bearish trend. Okay, let's dive into the chart and see more examples. Okay, all right, as you can see right now, price have been breaking structure to the upside, so this is a clear indication of a bullish trend until price broke below this low, giving us a shift of trend. So let's start here. I'll take this out, sorry. Okay, let me zoom in to get a clear view. We have this. Okay, let's start from here. Let's say this is our change of character. Good. Okay, we have been bullish from what we just understand. We've been bullish, then price now broke below a swing low, giving us a change of character, which means this is a clear indication of bearish strength, which means there are enough sellers in the market, right? Then when it happens repeatedly, just like in scenarios like this, price broke below the swing low, created a high. So you can see price created a high, melted down, giving us a new swing low, breaking below the swing low, giving us a new swing low, retraced, give us a new swing high, melted down, and give us a new swing low, give us a new swing low. So you can see we have another break of structure here. So this is a clear indication that we are in a bearish trend because it has happened repeatedly. Okay, so you can see price continues breaking structure to the downside. Let's just mark that out. You can see retrace, put in a high, broke structure, created a new low, retrace, put in a high, and now break structure to the downside. Again, put in a new low. Okay, this is our low. The price retrace, so you can see, and now price broke structure to the downside, put in a new low. So had a new break of structure here. Price put in a new low, retrace to the upside, and break structure to the downside, right? Had the break of structure here, and now so you can see this is our swing high, this is our swing high, and this is our swing low. Okay, so you can see price retrace, price fails to break and close below the previous low. This is not a valid swing low, just like I explained in the previous video. Retrace, created a new low. Let me draw this as price created this low, retrace and fails to break below this low, which makes it not a valid swing low. Price moved up again and fails to close below this low, so it's not a valid swing low. The same thing, price fails to close below this low, so this is not a swing point. This is our swing low. This becomes our swing low, the lowest point of price, right? So our trading range is from this swing high to this swing low. As you can see, price shift structure to the upside. Okay, now we are in a bullish trend. Let me zoom in to get a clearer view. Okay, now we can see we're in a bullish trend, we're no longer in a bearish trend. So price shifting structure from bearish to bullish is a clear indication of bullish strength in the market. Before we were bearish, we're in a bearish trend, and now this is an indication of bullish strength in the market, a clear indication that the buyers are about to take control, right? And you can see price retraced after putting in this high, price retraced to the downside, and boom, price broke above the previous swing high, creating this swing low. So this becomes our new trading range. So I have a break of structure here. Okay, then price putting this new high. So you can see price retraced, putting a low, then boom, broke above the previous high. Let me zoom out a bit. Okay, the price broke above the previous high, giving us a new swing high, which is this point right here. Okay, so what I just want you to understand is for it to be a trend, it has to happen repeatedly. Okay, so now we can clearly say we are in a bullish trend because price has broken structure to the upside repeatedly. We had a change of character here, we had price break above this high, had another break of structure here. So this is a clear indication of a bullish trend, right? So we can continue marking out price to see what price do. These are swing low. Remember, these are swing low and these are swing high. Price retraced, put in a low. The low failed to take out this high, not a valid swing low. The price retraced again, putting a new low. This particular low here, so you can see this low is lower than the previous low. And after price putting this low, you can see price took out this high. So making this our swing low, this becomes our swing low, while this becomes our swing high. As you can see, led to the break of structure. So it's a clear indication that we are now bullish. We're in a bullish trend, and you can see price continues breaking structure to the upside, right? So it's a clear indication that we are bullish. Okay, so just pay attention to this, take notes. In a bullish, for you to call it a trend, it has to happen repeatedly. In a bullish trend, price will break structure to the upside repeatedly, while in a bearish trend, price will break structure to the downside repeatedly. Just like you can see here, you can see how price breaks structure to the downside repeatedly, while in a bullish trend, sorry, let's take that out and move the chart a bit. Okay, while in a bullish trend, you notice price breaking structure to the upside repeatedly. Okay, so that's just how to identify when you are in a bullish trend and when you are in a bearish trend. Mistakes most traders make is that when they are in a bullish trend, when price creates series of higher highs and higher low, they trade against the trend. You have to understand that the trend is your friend. It's very, very safe to trade with the trend. Okay, buy in a bullish market, sell in a bearish market. It's that simple. In a bullish market, you notice price break structure to the upside, so all you have to do is to look for buying opportunities to ride with the trend, right? While in a bearish market, you can clearly see, sorry, let's take that out. In a bearish market, you can clearly see price breaking structure to the downside, so all you have to do is to ride with the trend, look for sell opportunities to ride the trend down. Okay, if this video was helpful, do well to like and subscribe. And in our next video, I'll be explaining the difference between a break of structure and a change of character. Thank you.